learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watches coming in on March 13th, 2020. And the next big trade is here. I want to go over a lot of things. Today was historical. Nonetheless, we have not seen anything like this in a while. So I want to go over now. I think I have a grasp on it. How we're going to trade this, the types of plays we're going to make, where is offering the biggest return. We talked a lot about deflation and theories, and essentially you are seeing prices come down on stocks, but as far as option trading, it is harder to squeeze out gains. This isn't just buy puts and make money. If you think that's what's going to happen, you are in for an extremely big wake-up call if you have not already received it. So we're going to talk about that. I have a strategy outline. I'm going to go over the plays we made today and talk about what is happening here. I will say this now. Something is going on. You guys need to pay attention. This does not mean panic. And at the very least, what we saw with the Fed today, they did a gigantic bazooka move with 500 billion or something around 1.5 trillion over the next few days in repos. We saw another weird bond move again. I forgot to update my charts here, but even though TLT went up today, bond yields dropped a little bit, but it should have been a lot higher, and you saw that after the Fed. There's a lot of stuff going on. So why I'm saying this is because this is an opportunity to look for opportunity and how to move. You guys need to protect yourselves at every corner. So you could panic, you could not panic, you could say this and that. All I'm saying here is that there is a lot happening, and now this is what we need to look for. It has to do with the velocity of this move, not necessarily the price. Now, coming into a weekend tomorrow or coming in a Friday and then the weekend, that will be bad and people will look at prices. However, the velocity of this is equating to a literal crisis. Last time, only times you could go back in history is like the EU crisis and all that failing, then 2008, then 2001, and that is just based on both the moves of not only the market, but everything in general, from bonds to the VIX to even just output data from some of these countries. The velocity now that we've seen from top to bottom on the S&P 500s, my friends, this top to bottom move is larger and faster, but key word here is faster. That is the key about this, is the speed. And now we are living in modern times. Markets moved a lot differently, but this move from top to bottom is a faster move than the 2008 financial crisis, which is very, very strange. However, I would say without reason. Now, the next level, we have to come back here to these October 2018 lows. And now to even get a different visual, when we started seeing this was the first repo crisis. And if you want to know what the repos are, don't get too caught up into it. Essentially, a repo, what the Fed is doing, this is a tool to combat liquidity. That's just keeping it very, very simple. I encourage you to look into it, but don't get caught up if you don't understand what it means. It's a very complex situation, especially now. However, when we started getting some of this liquidity crisis, Fed Powell has been talking about this for the longest time. The key getting into this is that when they first instituted this right here, top to bottom, was a 19% move. We're already, or 18%, and I think we're around the same thing here. However, this happened in 2 weeks, whereas this took about 3 months. So the velocity here is scaring people. And then now with the TLT, with the bonds, the dollar, the rest of the currency, I mean, I will go out on a limb here. I said this earlier, but I'm really standing by now. There is a dash for liquidity. Now, I read this the other day, and it made a lot of sense. And these could be plays to watch. Both Boeing, I think Boeing is having a huge financial impact on the system right now. And again, anything, and please know, anything I'm sharing here, this is my opinion on it. This is what I'm going over, and I'm not viewing this in the sense, I mean, honestly, I don't want things to go down. I'm over the things going down now at this point. I'm trying to observe what's going on and figuring this out, because the fact is we are stepping into uncharted territory. Nobody has seen this. All of the moves here are unprecedented. You have very little historical context, which is both confusing, scary, and fascinating at the same time. So I'm trying to call what it is that I see here and, take that advice in the wisest way possible. But I will say I'm very excited for what this is going to even bring about. Long-term investors, 5-10 years from now, y'all sit in these chairs, it's going to be looking very, very nice. The policies being very accommodative. But Boeing and what they're doing, even BlackRock is another one to watch. But now you are going to start seeing it, and you are seeing it. One, this is why the Fed is coming in. But if you see a mad dash to liquidity, this is a problem, and I think that's what's happening. you're seeing companies like Boeing and BlackRock, they're pulling their full credit lines. It does not mean Boeing is going to fail. It does not mean Boeing is down. Well, Boeing is actually really down, but Boeing doesn't need the cash is what I'm trying to say here. They have a lot of cash on their books. The problem is now, if you are expecting deteriorating situations, or in this case that we're seeing now, not necessarily deteriorating, but simply uncertain, and you think that could change the financial structure, what you're going to do is pull out your credit lines, take as much cash as you can now, because you are anticipating either the banks limiting your credit lines in the future or harder to get capital. So that caught my attention very big because we're starting to see it. And this is even what's making this a little bit different than what we saw in October, because we should be seeing some level of bounce anywhere here. So we will see. But pretty much now, I have a lot more to talk about. You guys got to pay attention. There's a lot happening. And I said this on stream, what worked 2-3 weeks ago is not going to work the same. This isn't going to be buying puts. So I'll just go over that strategy with you guys as well. So we have a lot to talk about. Let's get into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. We are live streaming all of this happening in real time. You could watch the markets in real time. You could listen to the plays. You could contribute plays, see what's happening, ask questions, and shout out to all the people sourcing information, all the people sending me information from all over. You know, we're going through it. There's a lot of rumors. There's a lot of different stuff. I'm going to try my best to vet it, but shout out to everybody participating and staying with it. I appreciate you all, and thank you. Our only rule, keep it positive and respectful. You guys have been doing awesome like that. I can't thank you guys enough, so please, please, please be smart in the midst of all this. I mean, it really, if this starts getting more serious, this has nothing to do with plays. I hope you guys know that. It's about protecting you, yourself, and making sure you guys are set up to prosper off of this, and not in the sense of benefit off of anyone's negativity, because the crazy part is you don't have to make any money to prosper off this situation if you simply know how to protect yourself, or know when the best climate and environment is to actually get more active investing. So be smart with that, and understand too, none of this recommendation option traditional who can lose all the most advantage. Please all advantage. Education personally. Thank you. Have a wonderful day. At the end of the day, you guys, just be smart. Be careful of what you even hear on the internet, even from this channel. I could be wrong at times. I'm just sharing what my thoughts are, and even everything you see on the internet now, there should be a higher level of scrutiny for information and everything. So be really, really smart with that. Please, please, please keep that in mind. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you looking at? What do you think of the strategy I'm going to share with you right now? Just post that all below. So back to the keys. Like I said, the velocity thing, that is what's most important. The repos was another bazooka. Now I'm still expecting my bounce for the Fed. They're pricing in even more cuts for this next meeting. I'm pretty solid. I know for a fact next Wednesday they're going to cut the rates again. However, if this velocity continues, it is cornering the Fed, the market, everybody right now. Something is happening. We just do not know, but you are seeing the reaction through bonds, money, individual companies now. Everything. Again, the panic really start to settle in today. Last night, we did the European travel ban. That's why stocks dropped. Mel Gibson got it. Oh my gosh, Mel. And then even 2 NBA players, and they canceled the NBA season. They canceled NHL, and now they're about to cancel the MLB. They're canceling a bunch of events. You are seeing half of the world get canceled, and this is surprising. And then also today, on top of that, even after the repos and everything, we confirmed that the president of Brazil has the disease. Trudeau of Canada, they said they're taking him to a safe place, and I wouldn't be surprised. That's what's probably going to happen here with Donald Trump. And they even had stuff now being said with the mayor of New York. And this is really, I brought up some examples today from like 2001 and other things that's happened. Here is what you need to realize. This is why I'm saying with money, it does not mean you panic. It does not mean you go crazy or anything. The best historical example you could compare any of this to, because we don't know what it is an act of war. Now, I'm not saying this is an act of war. I mean, I'm not saying it isn't. That's speculation. That's tinfoil. However, what I am saying is that the measures taken, and this is what Mayor de Blasio of New York said, the actions taken here are similar to what you would do in war. And now even Trump even said they're weighing emergency actions, the Stafford Act. We're getting to a different level here of escalation. But what I'm saying with active war now is, or wartime measures is the best way to put it, because they even said with hospitals, if they don't have enough, what are they going to start doing? They're going to start turning other facilities that are closed down. They're going to start turning those into hospital. They're going to pretty much mobilize different parts, and different things are going to take priority during war. But this is the best thing you could compare this to, because you're seeing an immediate reaction. It's coming out of nowhere. But even then, now how the money is kind of moving, but also the actions people are taking. So that's where I'm saying now, how do you protect? This would be the same strategy towards investing when either you're at war or even on the brink of war. Now, this is also what I'm saying too. I'll make another video on this over the weekend. But at the end of the day here, we're going to start slowing down with what we want to spend. At least for me personally, I don't want to. I mean, the fact is the values of prices are changing. The dollar, the currencies, everything. You truly don't know the real value of anything now. Yeah, you don't know the value of anything. Capitalism broken. Blah, blah, blah. Yeah, I get it. But even now, it's even more dislocated. So what I'm saying by that is the way I'm viewing it in my mind, in the next 2 to 3 months, if I'm a little bit more conservative with stuff, if things do bounce, things go back to normal, which is 1,000,000% in the cards. And I'm telling you, the minute everybody really starts to freak out, that's the minute everything's going to go back to normal. The idea here is now, if you're conservative for 3 months, you let pricing and value and currencies kind of catch up to the situation, then we'll be able to see the real value of stuff. Either your dollar will get you more or it'll get you less. Things bounce back to normal. You miss a big sale on a lot of stuff, whoop-de-doo. But the valuations stay at this level and things come down, it's going to change a lot of things now. So I'm talking a lot of global stuff, but keep that in mind. But now putting this into perspective here, the Fed is reacting. I already said the Fed, people are saying another emergency cut. No, this has been my theory for years. You could check this channel. Go watch my video on deflation. I explained this a year ago. I think the Fed is the all-seeing eye, and they see it before. I think they cut and did the first emergency cut coming into this. They already did the emergency cut that they needed. So keep that in mind. But now if stocks keep selling off and the Fed meeting doesn't produce that bounce, pretty much we need to bounce and kind of level out, do at least something like this for a few more than 2 days where it kind of kills premium and things level out. What I think could cause that will be QE. So I really think they're going to do it. A real QE. A lot of people make the joke, oh, they're doing not QE. That's what the repos are. No, you haven't seen it yet. You have not seen markets react. This only happened last time in 08, 09. It's a great opportunity, but when you see them, when the Fed literally starts buying stocks, that is what I think could change the tide for a little bit, because that mixed in with all the past stimulus, that's what you guys got to realize. They're throwing bazookas. They're offering $300 billion stimulus. All of that's for the payrolls, all of this stuff, man. It is crazy because that has a very bullish effect, but the negativity is outweighing it. So the minute there's a crack of light, that is what is going to cause some sort of move, but I'm looking for that to set up to give us a better opportunity to now set up for the second half of the year. Now, the next thing moving with companies and what we got right now is everybody is preparing for slower growth. These are the rumors I'm hearing. This is what you're seeing with news, but it's starting to settle in. You're seeing it with the cancellations and the closures of all this stuff. People are preparing for that now, and that is what is occurring. However, this still is going to need some time to be reflected in some earnings for companies. However, there are already companies that are already there, so keep that in mind. That's where we have to see, because if the market caught on to this a lot earlier, and then again you mix in what's going on with oil and all that, which I still think is a big issue, probably if not the biggest, that is going to create an effect there. But now some of these companies may have already moved in there, so be careful. That's why, again, the put premium is very difficult. And like I even said, you can't just buy anything right now. Again, my deflation theory, it is even being harder to, again, if I'm saying there's a dollar crisis, dollar liquidity problem, it's harder to get dollars. It's going to literally be harder for you to make money on a put or a call. You're seeing it right before your eyes. A 9% move on the stock market. You know, Amazon dropped 8% and you made 100% on an out of the money put with 2 months before earnings. Get out of here. That's nothing considering the risk, not to mention every other play. So keep that in mind here. But now, this is what I've figured out through my premiums. I have all these premiums. I've been looking at them. This is what I told you guys I've been taking a look at. This is how you could go about the options. It's risky either way. Don't try this, but this is what I'm doing. If you want a higher percentage, you're going to have to do the short term. That's with the options. I'm talking 1 week, 2 weeks, maybe 30 days, maybe. But those are the ones producing higher percentages. However, the ones that are long term, they're only going to give you a few 100%, if that, maybe 50%. But when there's all these bounces, they're going to hold their value a little bit better. Keep this in mind with what I'm saying with liquidity. There's a high risk, high reward. So if you're providing money for 6 months out and playing all that stuff, it's not going to really help. Whereas now, it's not going to add too much liquidity. But if you're the ones taking the high risk, high reward, and you're willing to go after these short terms that already have somewhat high premiums, but then if they get in the money, they could go crazy. You're providing short term liquidity. There's a higher risk to reward. You're pretty much getting a higher incentive to take on the short term plays. However, there's a lot higher risk. So keep that in mind. And then moving forward now, the last thing is going to be oil dropping below 30. That is going to be the next next shockwave. We're already there. But if it isn't more shutdown news that brings the market to kind of panic a little bit, it's going to be that oil drop. So watch out for that. But let us get into the plays. So this is one. I have a few different things. I'm going to go over some of the plays I made today. The first key I told that you guys need to take out is this: the high percentage versus the low percentage, short-term versus long-term. Utilize that in your strategy to know what you're buying. You'll see that with some of the plays that I made today. Next, it's going to be earnings. Believe it or not, now, like I'm saying, some companies price this in, some have it. However, you could get the longer-term contracts. We played earnings today. You'll notice I took 2 big plays for this reason, because earnings now, you could set up for them now, and you're getting the double whammy. You get to play both the short side on the market if anything goes down, but then you could also play the downside on the market. Same thing if there is a bounce in reverse. So the strangles will work just as we intend usually. But those are going to be the ones that'll be liable for mispricing, and that's what I got to see here. So both short-term and long-term, but at the same time, if you're setting up a play for earnings, we did that with Costco last week. Even though Costco didn't move, we made 300%, 400% on the play simply because it held up its value with everything going on, even though the earnings play didn't miss. So you get to play earnings or the market, but at least you're getting one play with 2 different reasons to make it go up. So that's what I like about it. And then finally, I have a big play that I'm eyeing. I'm really, really looking at it. It has to do with this situation with liquidity. Even the coin has been telling me, no, I got to wait for the right time on this play, because if you get the timing wrong, it'll be there. So be on stream. I might scale into some of it tomorrow, or I might have to do it on Monday, but we will see. So as far as plays go that I made today, pretty much the biggest trade I did was EEM. I sold out of this. So it's pretty much at the price I sold out of it. I sold out after the repo stuff because I was getting ready. I wanted to ride it. I said, well, I'll ride it all the way through unless acted upon by equal or opposite force. And that's what this SPY did with that repo announcement. And I'm still worried about that because, again, that is very, very bullish. Do not think the market has to just come down. So we had a lot of money on this play. I had 50 of these contracts. I sold 40 of them for about what do we get? $329. So I got $13,000 back. We bought the initial 50 for $2,000. And now I'm holding still $3,000. They got in the money, but EEM doesn't move much. However, EEM still does have downside as far as emerging markets, and comparing this to what happened during the Euro crisis or any other one. So EEM still has a lot of meat on the bone. However, the premiums are expensive, and this was hard to squeeze out 500%, so keep that in mind. But I'm just going to hold those remaining 10, and now here's the key. Otherwise, I'm still holding those TLTs. Remember, we did that TLT play. This is that same original play. I've not ghetto spreaded it. It's 1,300 to 18,000 now. I'm still holding this given the Fed. I've already taken most of the TLT profits, or we have them ghetto spreaded, so I'm holding. But the main point is this. You guys saw yesterday, I had like 60-something cash, and this is what you guys got to be careful for. This is why I took that play. With anything, all these balances are inflated. It doesn't matter what is showing. There's different spreads. The key right here, again, the dollar holds power right now. So make sure your cash is reflecting your balances. So make sure pretty much what I'm saying is if this goes down to zero, if you lose every play, what are you going to be sitting at? That's your cash balance. So this is how I'm using everything to keep my eye on that. So those are the plays on that bigger account. And again, I have multiple accounts. One, because of all of the issues we've seen across the board with brokerages. And then we've had these different accounts set up for different purposes, but they all had different plays and they started going. So that's why you guys are seeing them all now. Even then, same thing with this account though. Like I said, the cash, you guys saw this account at the beginning of the week, even last week, this was at 50,000. This one went up another 50%. But the key I'm looking for here is going to be the balances. So now as far as the plays now, these are the ones that I made today. I took a lot of profit. I sold one of these Marches, and now this is where my thesis is coming from, because I was observing the shorter term contracts. So remember, this contract was up like 400% this week, still expensive, but now it really went crazy. This was 5,000% gain. We bought this at like $30. So I sold one of these at $1,100. I closed out of that IWM play for $8,000. So you guys remember this? That was one of those free plays. We already took 2,000 or 3,000, but it got to that point. I was like, well, it was so deep in the money. It had a $12,000 max gain. Instead of waiting for that full gain, if there's a bounce or anything, I said, give me the $8,000. Closed out of that Amazon from yesterday. I'm still holding the May, but we bought that for $500. Sold out for $1,000. Sold out of the Babas for like 30% gain. Again, we bought those the other day, and these contracts were purchased late. And this is what I'm trying to show you guys. April, June, they had more time, but they didn't gain as much money. So I was quick to sell off these ones because I was seeing, well, they're only going up 30%, 40% after today. That means they were very, very inflated, and it's hard for these to even go up in value. value. So I ditched those. I ditched the AMDs. Again, those went up even 30%, got $1,000 there. Sold that. I had one more of those March 175s. I cut out of that at 765, and I started to take more as the market was bouncing. Then I did a short-term YOLO for the weekly. I forgot it was Thursday, so this play was a little bit bad. I got these March 13th 190 calls at 35 cents. However, because the volatility, they held up in value. Again, people, and they really went up too after the run-up, but I'm just going to hold those. If not, you're seeing I'm making sure I'm taking so much profit, so any of these plays I make, it's averaging out, it's leveling out, and that's where now I'm balancing it between Mays and Junes. And if I'm trying to get more yield out of these moves, I'm aiming more towards the short term. But I learned very quickly from that play, and then I made another move on Boeing. So here's the play. This is the strangle, and you guys can see how this played out. A strangle is playing both ways. So I did a next week on it. I spent $870 total, $480 on the 115 puts, and then I spent $390 on the calls up here. But you see we're up overall because now the whole idea is if there is volatile moves, you could play both ways. The point is that it's going to move in one way to make up for the price of there. However, with high premium, strangles could get dangerous because you could lose on both of these plays. If it bounces up, doesn't get in the money by expiration here, or doesn't get in the money by expiration on the upside, and I don't take the premiums while they're high, you will lose the full amount. That is the full risk. There was that play, and then I did Ulta. So here was the earnings play. Now this one I justified. I put $1,000 on it because it's earnings. It's a March 20th next week. That's very risky. You guys have not seen me do that much, but think about what I'm sharing with you here and why I did that. So even then, Ulta pretty much stayed the same. They had a good earnings. They went up, but it dropped. Again, even the markets dropped even more after hours, but the idea here is now playing the earnings, and then if not, I could still get some of that upside from just the volatility, or even the volatility will make it harder for some of these shorter term premiums to get crushed. Even then, like that McDonald's on any normal day, I should be down 90% on that, but it's at break even. So it's finding a way to take advantage of this situation. So I grabbed 10 of these at 90. I even said it on stream, even on the stream alert. I said I plan to flip this one by close if it goes up a lot, because same strategy as before. If the earnings volatility increases it, you could get some moves on there. So I sold half of these out at 175, got my $900 back, or just a little less, and I got 5 of those for free, but I'm still holding the remaining 5. And now the next play I made was in Adobe, and I really, really like this play. We were on stream, people were getting crazy, and this is what I was saying. Any of these plays, especially this far at the money, look at the option change. They'll start printing $5 like this. This is why I was like, man, you guys got to be very, very careful, because when there's no liquidity and the market maker does this, it is easy to overpay for something. So then if everybody's trying to get into a play and then people start doing market orders and they're rookies, I was like, this was dangerous, because I had to do 20 orders to get filled on this. I went all the way from 180, because again, look at the last trade. So I spent a lot on this trade. I paid $1.50 and I got 10 of these. So I spent $1,500. Again, I'm justifying it more, but I went to April. There was some Marches, but it was the same exact situation. You could have got a little closer, but I did want to now even test my theory, because I got this theory today. That's why I did the Boeings. I saw it with the McDonald's. So now even with Ulta, I did a March 20th for Ulta, and then I'm doing an April for this. Hopefully you guys are realizing, I said this at the beginning of the week, I did a test with AMD and Baba. This is what I'm doing. I'm throwing out place markers to see how the contracts are moving. This is telling me something. I'm not going to let them fool us here. So that's why I'm willing to throw out these positions with even certain size, because I have a plan to move forward with all of these. So again, keep that in mind with everything, and please do not trade any of this. You could make, even the thesis I'm coming up will profit you more if you could fix it in your budget and understand what is going on here. I got 10 of these, and I like this play. So hopefully this will be beneficial for you guys. It popped, it dropped, they beat earnings, but Adobe has a ton of meat on the bone. Now, given their cloud, it's going to be interesting for them because they could do a little bit better, but compare this, look at their run-up. They have a lot of meat on the bone here. That's why I was like, I kind of like this one a lot. However, the IV is insane, and it's very, very expensive. So hopefully that these get cheaper tomorrow, but this is the one I bought. But if you guys could find anything, I might even be down to trade them. Again, earnings continuations. We'll check the short terms, but I like Adobe. However, doesn't mean that the prices are still cheap. Again, you are fighting for yield right now. Again, with where the dollar's at and everything, it is a struggle to get some of this. So even if I spent these, I bought these at 150, that's still like a 600% gain from where they were at the other week. And even from Friday, it was about 100%. So not too bad, but keep that in mind. These are still out the money and very far and low probability. So there was that. And then finally, I also took profits. I sold out the UVXYs. I sold out another one. You guys remember these? This play was crazy at the time. Now it's kind of crazy how good it is. I sold one at the beginning of the week for like 700. I had 3 of them. I sold one more today at 1750. and I'm still holding one more, but we bought these at 36 cents, you guys. It was actually kind of nutty to think about. That was a very, very big gain, but I'm holding that. But as you see here, I'm taking a lot of profits. I'm still keeping some bigger positions to ride, but I am cautious about my profits because anytime there's a move like this, do not underestimate the market to revert quickly and kill premiums, especially with so many contracts out. They are going to play games with the premiums. I'm telling you this right now, so you guys don't get caught in a shitty situation. Your cash is powerful. As far as everything else, though, watch the value stocks. I played McDonald's for a reason. Watch HD. They're going to be very, very important as well. Even Boeing, they're at a very crazy level. Again, another 20% on Boeing. I hope you guys realize like there is something, and they could be contributing to some of the stress. Like I said, going to be holding those HYG still, watching out for the bond plays, and be careful. We are still in those USOs. Those didn't gain that much premium. And again, that is a play we got yesterday. So you're seeing any plays bought this week a lot harder to profit off of, especially if they had time. They kind of, again, like I'm saying, the things that worked last week don't work this week, but we learned those tricks from last week with the time, so just keep that in mind. They're catching on, and the prices are adjusting quickly, so you got to be nimble and don't get caught up on it. But I'm going to be watching the earnings. We're going to be looking out for those transports, everything else. And then that booking play, I'm still in it. I like it a lot. Everything else, though, riding the wave, responding, and then making sure we have exposure at both sides. But even coming into Friday, tomorrow's going to be crazy. Be there. Probably going to do a lot of trades on the short term to take advantage of what we got. We just got to see what happens. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. You got to stand your ground. Right now is not the time to lose your head. I'm sorry. I'm excited. Doesn't mean you should get panicked, baby. You got to sense the opportunity. Be smart. Protect yourself. You got to have some foresight here, but you also got to be nimble. It just got real. You could talk about this all you want. You could prepare all you want, but this is the real game. This is now war. At other times, your helmet was on. Maybe it fell off, anything like that. You better make sure it gets on there tight. We're not letting you get clapped. Be smart. Be patient. As long as you have some cash here, I'm telling you, let everybody go crazy. If you're the one who watched this far, let everybody go crazy for a few months. We could still get opportunities. We're still going to play it, but the key here is have money for the next 6 months. We are going to have an even bigger opportunity. Let the people get flushed out now. People are going to get discouraged. They're not going to get it. The short-sightedness is only going to last as long as you can see. But there's always a second move, especially in a situation like this, especially with the volatility of the world. Not even stocks right now, emotions, everything. It's creating a different opportunity. So get ready, be in the game, stay smart, and God bless you, baby. Y'all believe in God? You good, man. You got the armor. Everything is good. I feel blessed. I hope you do too. I love you all. Thank you for supporting. Thank you for being there. Let's go, baby. I'm putting you on game for a reason, baby. It's your time. It's the coach time, baby. 2020. Let's go.